Well, Pim, yeah, we started out the first trading day of the fourth quarter on a down note. The S&P seeing its steepest decline since July 2nd. This was after the Institute for Supply Management, their gauge of manufacturing, unexpectedly fell. We also got jobless claims growing more than forecast, and that once again brought in concerns that maybe the economic recovery will be slower than forecast, even though actually the balance of the data that we have been getting is actually pointing to the economy getting better. But also, of course, tomorrow is the monthly jobs report. And given yesterday's ADP number coupled with today's jobless number, many traders are saying they're kind of setting themselves up for possibly a disappointing jobs report coming out tomorrow. We'll have to wait and see. So as the market kind of grappling with this ISM manufacturing number, we saw the industrials lower, also materials and chemicals lower, but kind of an interesting story with FCM. This company provides lithium used in electric cars. It was lower. This was after Credit Suisse downgraded Rockwood Holdings because of price cuts by the largest lithium producer in Chile. Both those stocks actually getting hit pretty hard, industrials, but also some of the materials and the chemicals. Rockwood, along with FMC Corporation, you can see the kind of losses that we saw there. Financials, and particularly the bank stocks, the biggest drags in the S&P, on concern that maybe the economy is not ramping up as quickly as many had thought. And also the International Monetary Fund adding to evidence to that by predicting today that rising unemployment and also the waning effects of President Barack Obama's $787 billion stimulus program may restrain economic recovery into next year. Microsoft falling today, in fact, falling the most since July. This was after Goldman Sachs removed the company from their conviction buy list, which cited some degree of risk for their first quarter earnings. The bank, however, retained a buy rating on the stock, but technology generally lower. And of course, what we did see a lot of the auto-related stocks in focus today, mainly because General Motors, Toyota, Ford, and Nissan saying sales fell in September as waning demand for the cash for clunkers rebates kind of cut into a lot of the deliveries. And GM and Toyota said sales were actually worse than analysts had expected. That's it from here at the New York Stock Exchange. Pim, back to you.